Hi guys, quick update here for YouTube. It's Wednesday, 6th of December 2023. Hope everyone's doing great. It's not financial advice, educational purposes. So we'll take a look at crypto and we'll take a look at Bitcoin too. So we'll start off with Bitcoin. I mean, ultimately, since this move began about 9 or 10 weeks ago, we've been looking at 44k. So as far as I'm concerned, 44k has been hit. So this could correct at any moment. Could it go a little bit higher to justify the one-to-one logarithmic correlation between here and here? Sure, of course it could. That gets you 59k, and of course there are nice fat juicy stops right above here. Ultimately, I'm not looking at this as a 1 2 3 4 5, because if it was a 1 2 3 4 5, just the 3 would be at 76k. Let's make sure we're on the log chart here. Okay, that is the chart that you need to make money, although not the best chart you need when you're trying to get some perspective as to what is actually going on. So always best to convert to the linear chart whenever you can. So as far as I'm concerned, the move is done. 44k. This could correct at any time. I'm seeing some weakness in correlated markets such as Coinbase. We call the bottom in this right at the start of the year. It's gone straight to our target. This frankly is a short, right? So if this was a leading indicator for the health of Bitcoin and the wider crypto market, everything's a sell, right? And as we mentioned on the last video, right, we've gone over this before, 20 to 30 is a 50% gain, 30 to 40 is a 33% gain, 40 to 50 is a 25% gain, 50 to 60 is a 20% gain, and so on, right? This is around a 16% gain. 70 to 80, top of my head, is 14% gain. Let's keep it moving here just to justify the point. 80 to 90, 1 over 8, that's 12.5%. 90 to 100 is what, 11%, and 100 to 110 is 10%. The point being, if I was to plot this X versus Y on a dynamic risk reward perspective, the point is most of the gains are made early on. It doesn't look like this. On a nominal chart, it looks like this. So we were buying Solano at nominal 20 and the target was 75. However, if I was to plot this dynamic relationship, what's most important is where are the bigger percentage gains. 20 to 30 is a $10 gain nominal, but it's a 50% gain. Sounds obvious. Everything sounds obvious, right? Just like Mike Tyson said, right? Everyone's got a plan till they get punched in the face. Yes, it's so obvious that retail traders don't understand it. 70 to 80, or more to the point, 60 to 70 is now a 16% gain. So if I was to plot this dynamically, it would look something like this. So this is the difference between I deem as an amateur and a professional swing trader, which is really what we like to do in the group. And on the masterclass, the curve looks like this. So we are at the point in time on crypto, Coinbase, Bitcoin, Riot, MicroStrategy, where there are limited gains from a dynamic risk reward perspective, and Bitcoin could easily pull back. So the nominal chart looks like this. That's what 99% of traders are looking at. The 1% of us who actually understand this game understand actually buying Solano at 60 right now doesn't make any sense. Who cares if the target is 75? There's very little percentage gain left. The targets have been hit. Targets are there to be hit. Frankly, 44k wasn't even a very conservative target. I think that was a very fair target. It wasn't too conservative, and we've hit the target. Coinbase looks as though, Coinbase could easily pull back here going into the halving. This entire pattern to me is done. So I think Coinbase is ripe for a short at any moment, maybe even today. So that is dynamic risk and reward. Okay, the curve looks like this and not a straight line, and that is the difference between 99% and the 1%. So if you want to be in the 1%, take the masterclass. Anyway, so how high can it go then? Right, so assuming it's not topped, and right now, it has made an overnight high. I'm not too impressed with overnight highs. I like to see we have left this kind of like retail exhaustion sort of gap here. We are definitely in the wave 5. Suppose we could eke out another new high here. I don't like the high being made at 1 second, let me just grab my bearings here. What time zone are we on? We're on New York time here, right? So this was made after the New York session, right? So I don't usually like that. So I would like one more new high into this kind of region, then we go down, right? So if we were to go off the futures, as we've said, there are juicy stops above here, right? 50k does make a good headline, but honestly, we're at the point in the curve where there's limited gains and there's high potential for a large multi-month correction, okay? Because I'm not reading that as a 1, 2, 3, 4, 5. And that's the thing. That to me looks like an ABC. So if that ABC is pretty much done, like I said, I'm not impressed with the fact that the high was made yesterday after the market closed. Doesn't mean it can't dump from there. Of course it can. What's the day today? Wednesday, right? So we've got one more day of the buybacks too, which means things are going to start correcting anyway. And the S&P, frankly, is due a correction anyway. So 44 to 47k, my target has been hit. That was the ultimate target. We do have one final target just to run some of these stops up here. Ultimately, we're at the point in the curve where basically if that's the curve, we're like here somewhere, right? It's very limited gains now, and it would be a shame if this happens, right? So let's just say pretty much the ABC is in, so that to me is a larger W. I'm not really interested in Bitcoin ETF or the fundamentals of the halving. That makes no difference to what we do. So if you understand that and you understand what I've just said in the first 10 minutes, maybe you should take the masterclass. You'll be able to take your game to the next level. So something like that. So I think a multi-month correction is coming soon, very soon, today, tomorrow, Friday, maybe next week. We've got the Fed, we got CPI, S&P's do a correction. Coinbase looks pretty exhausted up there. You know, Riot, I've not had a look at Riot, but I wouldn't be surprised if it's looking, a bit of a doji type of, island reversal there. You don't want to see that kind of candle. That is like an island reversal, isn't it? So it's gapped up, then it's formed a hammer, then it's formed a doji, shooting star. That doesn't look good. So that is basically like an evening star doji. The names don't matter. We don't teach the actual names. It doesn't matter if it's called Doji or Hedgen Lee or Bruce Lee. No one cares about the names. What we care about, what is it trying to show, right? And it's showing to me that retail have FOMO'd in and smart money has exited this market, right? As you can see now, MicroStrategy, I understand he's made $2 billion on his market. See, you don't want to see that. You don't want to see this kind of gap up. That's not an acceleration gap. That is the end of a move. That was an acceleration gap, right? Rounded bottom flask, Walter White formation, as we call it, as we got on Myria. 1, 2, 3, 4, 5. So we're asking for trouble here. It doesn't have to happen today, right? It could be tomorrow, it could be next week, but we're very close to a point in the curve where there's no point any swing trader being long. It makes no sense. You want to wait for the next opportunity. These are not opportunistic prices. Ethereum, 2.5k was the target. Ultimately, like I said, we're going into 2.5k, pretty much there. This could correct at any time. I don't think you'll see 5,000 ever again on Ethereum. And Solana, well, we've been out for this for weeks because we understand risk and reward. It's done nothing. So Solana, everything frankly, but Solana especially, it's due one of these. So, let's say it's even worse, right? And then you think, right, okay, as a swing trader, why would you hold something, for, 6 months just to break even, right? Would you do any kind of employment for 6 months to get paid nothing at the end of it? No. So from a swing trader perspective, there's nothing to do. And frankly, we've been shaving off into this strength. We're due a correction. So that is the case with Coinbase, Bitcoin, and a few of the stocks. Now, SPX, let's have a look here. Let's see what we got. So, longer term, we still think we're in a secular bull market. We're not expecting this big line down here. We've refused to believe this is going to happen. There's no valid Elliott wave count which suggests a crash just yet. I think eventually there will be a crash and the world will end, right? Everyone's going to open up their door, grab GTA 6 with the main character there, what's her name, Lynn or something, whatever, and then that's it, right? The day GTA gets released is the day the world ends. Everyone knows that. I've been saying that for 5 years. What's the end of the world video on the Dow Jones? I keep on forgetting. We're going to have to get some kind of timer here, right? So 42306. I'm going to just have to peruse through my old videos here. Well, I don't have the time to do that because we don't like to edit these videos. Anyone too clean is usually dirty, but I'm just guessing it's 42306. So you guys will have to have a look at that. Everything has been forecast because we have a flux capacitor here and we time travel. Yeah, so we're 6,108 Dow points away from the world, and that's points, right? So quote GTA 6, right? Right now, Neo is with the Merovingian. We're only on Matrix Reloaded. We've not quite gone into Matrix Revolutions. Now, obviously, when the Dow breaks 40k, then we're going to be struggling, right? Then we're on Matrix 3. Then he's on his way to Machine City, and he's got his final, battle with Agent Smith, and then somewhere up here the world ends, and then that's it. It's all over. So, this, I mean, technically this could go to zero, really. I mean, the most optimistic scenario is that it stops around here, but it could easily go to zero because we've never had a crash this significant. So, significant things will happen. Like I said, hopefully GTA 6 gets released before the world ends, and hopefully we get a part 2 to our mortgage amortization course. Anyway, let's get back to the S&P. Let's not talk about end of the world scenarios, although they will happen, let's be honest. So we think it's an ending diagonal, so yes, we're just going to pop that bad boy onto there, and basically it's just an A, B, C, D. So this makes the most amount of sense. It shows to me, it proves to me there's a few more years, maybe 18 months left to this business cycle. It's the same count which we continue to develop. Obviously I can't share the actual charts with the YouTube audience. That would be unfair on group members. So this consolidating underneath this trend line, we're so close to all-time new highs. We're going to get there. I'm reading that as a W, that as an X, which means this has to break down in a 5-3-5. So I'm expecting a correction, a flat correction soon. Then we go higher into the US election, maybe a couple of months afterwards, something like that. Then we're in 25, 26, well, 25, then we're in 26. So, this ultimate target is 6,667 plus 3. Right, that is the actual target there, yeah? 6,670, right? So, I don't see this S&P undergoing the end of the world crash just yet. Right, I think we have to get more people FOMO'd in at these ridiculously high prices, and the next top is the most significant, I think, because it's Apple and Microsoft which are going there. So significant things going on in the S&P, but I don't see any imminent crash going on, and I think the Nasdaq should be able to get to 20k too. So Nasdaq is also, I mean, nothing else makes sense to me here. So if you pop a few trend lines on, so something like that. It's the only kind of way. It's not a real impulse, and it's not a real zigzag, and it's not a flat. It's not everything. It's an ending diagonal. When you don't know what's going on, it's probably a diagonal. So it's like a corrective impulse, right? So that's the situation. There's not really much to update here, secular-wise. Short term, we'd definitely do a correction. So that's it, really, short and sweet. So we can just summarize then. And if you want to join the group, you can join the group, or better yet, just take the masterclass. It's there. We don't do any Black Friday discounts anymore. There might be a 20% discount code at some point if I'm feeling generous, but I don't really believe in giving discounts because then everyone's going to have the same information, right? It's not that it won't work, but so you don't want to dilute the content, do you? Right? So it kind of pays for itself. In the first day, really, in the first investment. So I don't think there's much to update here. I mean, we've had 6 targets on the way up. They've all been hit. We've had this inverted head and shoulders target here, which was 40,700. So ultimately, I mean, we're so close to a top. Before the halving, which is April something, we can easily get this. So this could easily pull back very soon. Like I said, it doesn't have to be today, right? Nothing has to happen today, but that does look like a wave 5 to me, and we're very close to a top. Media is very bullish, fear and greed is very bullish, net unrealized profit and loss is bullish. The hash rate and the Pure multiple are not giving us the right signals because we're in a bear market. I expect those to be fairly mundane, so you got to use the indicators, the on-chain indicators, in the right way. You got to contextualize everything that you're seeing. If it's a real impulse, it's going to 100,000. I refuse to believe it's a real impulse. So I'm looking at it as an ABC, because what else can it be, right? It has to be an ABC then, which means we're very close to a top. And then what does that mean? We're going to correct all of this. Obviously, right? Because everything occurs in 3s and 5s. So this entire move is done. And this is the volume profile on, Bitstamp. So let me just pull up pull it up on the futures here. Let's just see where the volume is, right? Because this X wave here is a larger degree X wave, right? So let me just make that clear. That's, larger degree, and it's correcting everything, the whole move over the last 13 months, which means we have to look at the volume, right? Let's say it's topped out. Like I said, could go 47k. I mean, the value area high, the one standard deviation starts at 32, right? And look at where we are. There's not a lot of acceptance up here. There's not a lot of volume up here at all, right? So, this could easily pull back before the halving, minimum 32, and then the VPOC, that is like the mode of the volume, the fairest price to do business. One of the three variables which we teach: price, time, and volume. There are no other variables here, right? It's like cooking. There's only two variables, heat and time, except here, heat is price, well, heat is time, heat is volume, and what's the other one? Price, right? So that's it, right? There's only three variables here that we need to look at, right? We're not amateurs here, right? We know what we're doing, right? So we've had 44k. So once your target has been hit, why should we now raise those targets, as most people are doing? When it hits your target, you need to act. You have to look at Coinbase. Coinbase has gone up. We've called the low in Coinbase and multiple swing trades throughout the course of the year. So, I'm looking at this thinking, right, okay, a multi-month correction could easily ensue to somewhere to around 30k. That's very reasonable, right? Once again, if you're of the opinion it's a genuine impulse, then obviously you could argue you shouldn't sell. But, who in my YouTube audience genuinely thinks that's a real bull market move? I mean, look at gold. Is gold not going to go to 1,000, right? All we've done is run the overnight high. We've just run the overnight high from a few years ago, and now we've probably formed an RTH. So is that not 5 waves up on gold? Right? Once again, you got to really zoom out here, right? So, once again, right, I'm not, I don't look at gold anymore, right? So I'm not a recent expert at this, as you would say. I used to look at gold way back. We were talking 7, 8, 9 years ago when it was down here, when it was a good opportunity. But you could argue that is the count, right? So you could make the point gold is now going to come all the way back down to $1,000, right? It might take a few years to get there. I don't know what that means for those fundamental experts, right? But I'm looking at that on the linear chart thinking, okay, is gold topped? And the long-term count on silver was always that it was going to go to $10. So where's the silver contract here? Where's the futures? Is it SL? I think it is SL. I always forget what the silver futures are. It's really annoying. SIL is the micro silver. SI, that's it. It's the SI. Right? So let's pop that on the log chart. Right, and then there was a trend line, wasn't there? We mentioned this about 5-6 years ago. There's a long-term trend line here coming into here. So let's just pop that on the monthly chart then. What is going on here? With silver, that is. I mean, that looks like a 5 wave. That looks like a completed something in there. Maybe it's an A, maybe it's a W. And then all of this is some kind of corrective B-leg mess. Doesn't really look impulsive, does it, right? So, if gold starts falling here, and then is silver going? I mean, that is a long-term play for silver. So I've always found the chart, and so I mean, silver's done nothing since my first YouTube video. It's just gone sideways, effectively. So hopefully, gold will give us some kind of insight there. I mean, it's just gone sideways. What a boring market. I mean, it's done nothing here. You cannot analyze this. It's done absolutely nothing the last. But that is a lot of cores getting built up there. And, what is that? What is going on? To me, that looks like 5 waves, which means all of that is some kind of B leg. And so we can get another one of these, right? So, I think gold and silver are very important here. Going into the GTA 6 release and Matrix, Neo battling Agent Smith on the end of the world. Could that go to $10? I don't know. That's for my YouTube audience to have a look at. Anyway, let's just bring it back to Bitcoin there. But I think gold and silver are very important here. I've not been looking at them the last couple of years, to be honest, but I think they are very important. So anyway, that's it. So just to summarize then, from a dynamic risk reward perspective, any swing trader, I can only respect them if they're taking profit here. Either they've closed the whole position, they're hedging, or they're shaving off. And you've always got three options, right? You don't have to kill the entire position. One is shave, which I'm a huge advocate of, shaving. You don't kill the whole position, kill off 50%. One is hedging. And then what is the third one? Closing the entire position, right? So you don't have to close the entire position. You can shave off, you can hedge. I don't know, with some puts, but hedging is quite difficult. So then what you're left with? Well, there's nothing else to do, right? You have to ask yourself, there are new individuals here who have now FOMO'd into this market, and there's a buyer for every seller and a seller for every buyer. So anyone who's not in the market, to FOMO in now makes absolutely no sense. This is now only a market for those who are already in, either looking to shave off or to close entirely. But to me, it's very maxed out here. I don't see any dynamic risk and reward left in this market. And as you can see here, I mean, forget about the opinions that I'm making here. Well, the opinions are based on objectivity, let's be honest. But this is objective, right? I'm not making this up. This is the objective analysis over the last 13 months. This is even worse than the one on Bitcoin. Right? Okay, well, let's go off the futures, right? So we get real volume. Let's not go off Bitstamp, right? Because the VPOC's all the way down here. That can't be right, because so much volume was transacted here. So if you're going to do a volume profile, at least use the futures, right? So that makes a lot more sense. And you can see that visually. So much price action took place here. It makes sense. That's the mode. The mode is the most, right? Mode, median, and mean, right? So that is the mode. So Bitstamp is not accurate. So if you're using volume profile, and I say this on the masterclass, use the most accurate data that you can. Don't use SPY SPX with no volume or a CFD. Use the SPY ETF or use the ES futures, right? Because it's the real volume. No one cares if it's delayed. You don't care because it's only delayed by 10 minutes, right? So this is an area of interest on the pullback, right? And then we could then rally, fine. Then we might make new highs. I mean, even then I've got my doubts, but then, it kind of depends, how complex this gets, right? So if this entire correction, this move here took 400 days, how long is that X wave going to take? I don't know. Right? Maybe it's just a dump into the halving, then a pump post halving, fine, right? I can live with that. But then if it's going to match or at least half the area, that kind of takes you into July. So this game is all about dynamic risk and reward, and nothing else matters. Not in a market like this, because you'll end up with something like this, and that is the problem. Right, that is the problem. Alibaba. So Alibaba should always be used as a reference point. This is what's going to happen to the stock market when Neo defeats Agent Smith and GTA 6 gets released. That is the fate of the Dow Jones right there. So anyone who doesn't understand risk and reward, like when you're wrong in a market like this, you need to get out of that position straight away. And that is the only way you can stop a large loss in a bear market. So whilst we are secular bullish, it's only a few stocks. This is no longer a stock market. In fact, it's not been a stock market since I've been doing YouTube videos. It was since 2008. Had a great time. Great stock market. Now it's a market of stocks, and specifically, you have to know where you're going. It's only really a stock market. Maybe 7, 10, 15, 20 stocks are actually doing anything. Most of them look like Alibaba. I could show you at least 50 examples of this, and whilst it might be tempting to buy Alibaba here, it's not the right play. I mean, it's done nothing. We haven't looked at this in over 2 years. Anyway, that's it. I've got nothing else to really add to that.